Welcome, everybody, to another episode of the AgView Pitch. We are heading into a new week. We are already getting close to halfway through November. We're into the second week in November already here, which is kind of crazy, the 11th through the 15th. With that said, we have today with us Mark Welch. Mark, how's it going today?
It's good to be with you.
It's good to have you again. It's been a little while. I think we were just getting started on harvest last time you were on, or maybe a few days away from it even, and now we're wrapping it up in a lot of areas. A lot of guys have been done for a
Yeah.
lot of guys are finishing up. I think my family's operation we're going to wrap up this week. The way things look, God willing, and yields were really good in a lot of areas. What are you hearing as guys wrap things up? Anything different? We'll get on the USDA report here in a second, but from the farmer perspective, anything you're hearing aside from really good almost everywhere?
Well, it's not good everywhere.
No,
We had some pretty,
I said
stressful
almost, right?
conditions. Yeah, there you go. There's some areas out in the hinterlands that it was a pretty tough year.
Yeah.
Um, we started out with a pretty decent spring, but we just ran into some, the heat and drought, right? Some critical periods. And it's, so many times when you have some stressful growing conditions, isn't it amazing what a difference just a week or even a few days of planting can mean? Maybe you got it in a little early and took advantage of some better conditions, or maybe it got a little better later. And we saw a lot of that variation across Texas, in particular. That we're gonna come out with a corn yield that's going to be below average for Texas. We get up into the high plains of Texas, which is the Panhandle, more of a Midwest crop calendar, but a lot of stress with heat and wind this summer. When it got tough, it got really tough.
Mhm.
So yeah, not a great year, and that is compounded, of course, when the price has set back in response to a really big corn crop and really great yields elsewhere.
Mhm.
So yeah, it makes it tough when you don't get that crop and to see the prices pull back like they have. It's going to create a little stress down in this part of the world. So it's great to hear that those guys have hit, but it hasn't been everywhere.
Yeah. Well, and we're seeing that too in those areas that had the super wet conditions
Sure.
early in the season and had the later planting, and then a lot of nitrogen deficiency and all kinds of other things. And then the other common theme that I continue to get too is there's a lot of areas when I say it's really good, the unfortunate part, it was just good enough. In other words, where the crop insurance isn't covering anything, but it wasn't good enough economically, right? And so there's
Uh,
not enough dollars to cover the input costs on that side of the equation. And that's really the tough part when you yield APH and you still can't cover your cost of production.
right.
That's kind of the stress level, even though the yields were, average or above average and still can't cover that. That's the tough part. So we'll segue back into a little of that economic piece here in a minute, but we also this last week on Friday had the USDA report. We had an election last week that turned out with Trump, pretty much I would say having a mandate and the way it looks anyway. And so, a lot of his policies and a lot of things from the tariffs to some of the things he's talked about in agriculture, and then this USDA report, talk about kind of both of those things in concert. Is there anything you're seeing there that you're watching or kind of get your 2 cents?
Yeah, you bet. And of course, the WASDE report, USDA, really the only change they made on the U.S. corn crop is they did back that yield off just a little bit. We're still obviously in record territory, 183.1 bushels per acre instead of 183.8, which
Mm-hmm.
is still just an amazing number for a national average corn yield. And then left, most of the other pieces of the balance sheet, supply and demand, pretty well unchanged. The uses were unchanged on corn, and so that lowered the carryover. We dropped production just a little bit, and so it lowered that ending stocks number, lowered that the stocks to use calculation, made it look a little more friendly, but we're still in that territory of relatively large ending stocks relative to use. And so with a few minor adjustments, and so we're in that world of enough stock. We don't have that supply worry and concern. Well, that's kind of abide with us, I'm afraid, through the winter. And of course, they will have all kind of conversations about, planting decisions and yield and what's happening in South America and, the typical uncertainties that, typically would give us an upward trending market as we move into, January, February, March. But we do, looks like we are going to be, wrapping up this crop harvest season here in the U.S. with certainly adequate supplies, and just kind of see what happens on the world stage as well. But some of the largest ending stocks that we've had in several years.
Mm-hmm. One of the things, with the election results, the way they turned out, I think, is the question of the demand side from, some of our customers. And it kind of appears like recently we've had some pretty good corn demand, maybe even slightly ahead. You can answer that better than I can, but just kind of looking at it from the face value, it looks like we've had some pretty strong, at least recent corn demand. And I'm wondering, do you think that some of that's coming from the standpoint of, we're gonna get a whole bunch of this stuff in here now, soybeans
Right.
included, before the tariffs hit, and then we're gonna shut it off for a bit. And so, do you think there's some threat there, or do you think there's anything
Yeah.
to that, or is that just a guess? That's who knows?
Well, and certainly that's the information that's been shared to this point in terms of President-elect Trump's agenda. Certainly, to rely very heavily on tariffs in terms of our participation in the global economy. And if we look back at in his previous administration, when he followed through with that same kind of tariff policy, we could look at what happened to U.S. ag exports. Look at that 2017, 18, early 2019. We had a pretty big setback in terms of our ability to ship grain. We're talking about corn, wheat, grain sorghum, soybeans. It really cut back on our level of participation in the global market. And that's one thing that concerns me as we're looking kind of shifting our focus now from the 24 crop out to 25. If we're talking about that pile of grain that we're carrying over, and USDA just released their long-term projections as well, came out late last week, and they're projecting 2 billion bushel carryover in the corn crop plus. For the next several years moving forward, that's a pretty big pile of grain. And if we make crops, that's on the production side. But if we're going to whittle that pile of grain down on the use side or on the demand side of that balance sheet, the area in which I think would be the greatest prospects to do that would be export demand. I
Mm-hmm.
don't see a lot of growth in U.S. domestic use categories, particularly when it comes to corn and wheat. Feed and fuel are our biggest uses when it comes to U.S. corn. Ethanol production's been really good here so far in this current marketing year, but gasoline demand is really not growing in this country. We're not looking to get back to pre-pandemic levels, and that really dampens the overall ethanol consumption picture. Livestock numbers, maybe increasing poultry and pork a little bit, but our cattle and feed numbers are lower, and we're getting more efficiency in that pounds of grain for pounds of protein calculations. So I don't see a lot of growth in the feed use category, and so if we're not, shifting the needle much on the domestic side, we really exports will be, I think, especially important in the next marketing year and beyond if we're going to keep that pile of grain from growing to real burdensome kind of numbers.
Mm-hmm.
And then combine that with uh, impediments or barriers that would allow us to participate more fully and compete more freely in the global marketplace. That's not to me a positive recipe for a greater market share for U.S. ag products in the global stage. So
Hmm.
I think there's some real concern there at a time that we really are relying on that export piece. Will we have policies in place that are create barriers to do that? And
Hmm.
again, that we'll see how it all plays out with. There's lots of moving pieces here of how that would all come to fruition or not.
Hmm.
But that would be a concern based on what we've seen in the past. And that would be a concern in a time that, to me, if we're looking for a demand, one of the categories of a more positive outlook, it would be on the export piece. And I think we've got some real concerns there.
Right. Yeah. Well, and I think that's really kind of leads to some questions, both short term and long term. We'll start short term here for a minute. Um, there's producers here yet that still have some grain, I think, to market, for whatever reason, for price opportunity, but also, probably for cash flow reasons and things before the end of the year. But there's probably some basis contracts out there and those types of things that are going to need to be dealt with. Are there any kind of price ranges, perspectives, or things that you could throw out there to the listeners and to the viewers, on kind of some ranges that maybe they should be looking for as we, head into December and towards the end of the year to sell those bushels to generate that revenue that they need yet,
Yeah.
and maybe what are some ranges they're looking could be looking at.
And it's certainly you talked about kind of wrapping up harvest where we are this year in last week's crop progress report. What was it? Over 90% of the U.S. corn crop was in the bin, and normally we'd be about 75%. So
Mm-hmm.
we're bringing this crop in early. If you look at the seasonal price pattern of the December corn contract, we've been about a month early all year long on this thing. We hit the high about a month early. We bottomed out this thing about a month early. We're getting some late contract strength in some price action about a month early. So it's nice to see a little rebound off of those harvest lows that came in late August this year. So certainly a bit, 430 is better than 395. And so even though that's not great, at least that's a little bit of a balance that we've gotten here late in this market. One thing, as we're making marketing decisions here late in the year, that really I think can help guide that marketing decision is what's that carry in the market? Is
Mm-hmm.
it looking where you could contract that grain out into against that March contract or out into the May, depending on your storage situation, your cost and logistics and all around that, the quality of the grain that you've got in the bin and cash flow needs. But if there's enough carry in the market that it would reward you to keep that grain in storage and go ahead and contract it at those higher contract levels, and particularly with a basis gain, and maybe to get some negotiation around that. We're not talking dollars per bushel, but could we be talking nickels, dimes, 20 cents a bushel? That again off of a little bit of a bounce here at the end, and if we can carve another 10 or 15 cents out of that, that's certainly something I don't think we want to just turn our nose up at. That could still be of some relative significance, particularly if you had a good crop and you got help make up for some of the revenue shortfall with bushels,
Mm-hmm.
and try to add a little back on that on those sales right here at the end of the year. And again, that carry in the market I think can be a strong indicator. Just to leave that grain in the bin, unpriced and unprotected is a pretty risky strategy. And if that's the market strategy that person wants to adopt, that's fine. Just recognize that the speculative position that is, that you are taking on all of that price risk. And if you're not pricing that grain that's in the bin, either putting a price floor under it, contracting some of those bushels out, say maybe not do it all, but getting something done as this market's giving us, reward that market for that little bit of a run that we've had. I don't think that's a bad approach. And if we sell it all too cheap, and this thing does take off if we turn the first of the year and we look back and feel like we sold all that grain way too early, what better marketing position we're going to be in for that 25 crop if that's right.
Mm-hmm.
And then we've talked about this, I know many, many times, that when you price that grain today and you look back at it in 3 months, you hope that you sold it too cheap.
Mm-hmm.
That's exactly where you want to be,
Right.
because that means you're in a much better position marketing wise for all that crop you're going to put in for the next year,
Yep.
rather than looking back and being in even a worse position for what we're able to do. So again, certainly no crystal ball, no predictions of where this thing is headed, but we've got 30 or 45 cents on this market. I didn't think we were going to get right here at the end,
Mm-hmm.
which is not a bad place to be. And then
Yeah.
particularly if you're looking at those at the carry in those distance month, may give us some marketing opportunities to, to pad that just a little bit.
Mm-hmm. Yeah. When you look at the ranges, we've been in sort of the high end of that, and to break through that would, is probably going to be kind of tough, just because I think there's going to be enough potential sales. And I think the other thing too is basis is starting to do some of the work in some of the areas now too, where guys that do get done and have sufficient storage and have the ability to take advantage of the carry, because I think there's also some operations that really got to analyze that carry very closely and say, does that carry pay? If they've got line of
Mhm.
credit interest rates, even though they're dropping some, they
Right.
haven't dropped enough to make a difference. And so that cost of money, and and there's operations still paying off seed bills and those kind of things from last year that they had on separate notes. And that's always the scary thing for me, is you look at your line of credit, but then there's a lot of times there's some third party debt, whether it's a seed company or herbicides or whatever it is, fertilizer, different things that people bought for the
Mhm.
24 crop that's maybe not yet serviced. And if you're paying interest on that stuff, I think a person's really got to sit back and calculate that out and say, does this carry, is it really justifiable? And
Right.
a lot of times lately anyway, it's been pretty pretty close as to whether the carry is worth it, especially when you, like, to your point, we've seen some pretty good price strength here lately. And then also, the basis has been strong enough. And so we've kind of gotten both sort of handed to us. The problem is most of us want, 475 or $5. And, you know, the odds of that,
Right.
we got to recalibrate what those price opportunities are. I guess the last question I want to ask you, and you kind of led into it a little bit, is 2025. I think we closed on Friday in that 451 range or something like that. Um, a lot of the producers that we work with, their cost of production is going to be somewhere in that high 470s, it looks like, and
Yeah.
we have a long ways to go yet to get a bunch more of them in. But it's pretty evident that we're going to be just shy of $5 for, if producers really want to make some money. Any thoughts on, do you still go ahead and pull the trigger when we get, every 10 cents up or every, segment up? What do you think?
Right. And there will be those that can, analyze, the price movements and looking, some technical indicators of areas of resistance and support as we've again, let's say rallying back up to about, 450 is not a bad place to be. And particularly if you can, with some, maybe some basis negotiation, does that get you at something that's pretty close to a break even? And I think as we, look at putting something together for 2025, if that is the case, to get some, if a person hasn't gotten anything done and just get something started,
Mm-hmm.
yeah, is 450, 460, kind of thing, kind of nice round numbers. Is that a place, if we're not doing some either out and out sales, at least, are there some option strategies, some kind of floor price to not let this thing get completely away as we kind of move through the winter? Um, at this point, you would think we would have, again, just with our seasonal patterns and tendencies, would be for some price strength as we move through the winter. But as you just mentioned, I think a lot of unpriced grain and producers that haven't taken a lot of positions that we can snuff out a rally pretty quickly too.
Mm-hmm.
And so I think it's important to identify those targets and whatever that is for you. If it's that 450 number or 475, to be prepared and ready to do something as we get those opportunities, because they could be very fleeting. I think in the large carryover, kind of the threats of what could be of prices further down the road, again to get something done. So again, would I do it at all? Probably not. But would I want to maybe start layering something on, recognizing that not knowing what that next crop year is going to look like. If it's another big crop, we're looking at some pretty hefty, carryover numbers for U.S. corn.
Mhm.
And of course, weather can change all that very, very quickly. Uh, but I think recognizing that we typically make a crop, and if we look at where we're, those patterns as they normally would lay out, just to be prepared to get something done along in that first part of the this winter and early spring is typically not a bad strategy.
Mhm.
When you look back over the year to have gotten something done. And again, it's back to that same philosophy. If you sold it and you sold it too cheap and the market went up, that's exactly what you want to have happen. If
Mhm.
you sold it and the market goes down, gosh, don't you wish you'd have sold some more?
Yeah.
And so that's kind of where we're going to be, regardless.
Mhm.
But if the fear is if I sell it at 450 and it goes to $5, how much better off we're going to be at $5, even though that we get it some of it priced too cheap at at 450. Again, but if 450 looks like it works, I've got nothing else done, and I want to start laying something on, start putting this thing together. Uh, Identify the number that works for you,
Mhm.
and I think put that plan in place to go ahead and get something done as this thing moves along.
Right. And I think the same thing applies to every commodity too, whether it's cotton or soybeans or wheat, whatever. Utilizing that same philosophy is gonna help a lot, I think, and especially in this environment when the price is, on the low end, you're hoping it does go higher, and you kind of gotta be plugging some things in along the way, and maybe recalibrating things, and it's going to be interesting because I think when we look at cost of production differences between corn and soybeans and acres planted, it's going to be tough, I think, for guys to plant a lot of acres of soybeans. Although I think some people look at it and say, well, we're going to plant beans because it costs less to put them in. Well, hopefully they're not doing it that way, and they're looking at which crop is going to make me the most money, and
Right.
use that
Uh,
as
yeah.
as the
Well,
direction for the decision.
yeah.
But I also think there's logistics and there's all these other factors that enter into it. And I know Joe Vaklovic did a survey, and the majority of the people are going to not change their rotation. They're going to pretty much stay the same, although there was a pretty significant shift in more corn acres for those who did, flex acres. They were flexing more to corn. So it's going to be interesting this get into 25. We could see a pretty massive acre shift
Yeah.
potentially. The soybean market doesn't correct that ratio between the two eventually. So I might give you last word. Anything you want to leave the grower
Just
with?
to throw out a number, and this is going to change. But again, back to USDA's first look at 2025. They're figuring on, and their projections, their models are for 192 million, or excuse me, or 92 million acres of corn in 2025
Mhm.
at a yield of 182. So 92 million acres, 182 bushel yield. That would give us ending stocks based on their use categories of just over 2.3 billion bushels. We're ending up this year at just below two. Season average farm price 390.
Mm.
Ouch.
So four
Ouch.
450 looks better than 390, doesn't it?
I was just trying to put 450 in perspective. Now
Right.
again, that's a
It-
that's a model projection
yep.
that is not what's going to happen. It
Right.
could be better, it could be worse, I don't know, but it will vary. But put some numbers out there and look at what are the likelihoods or possibilities of that. Does that seem reasonable? Could we plant 92 million acres of corn next year? Yeah. Could we yield 180, 181, 184 in a
Hmm.
good year?
And didn't we
Yeah.
plant in 23, or what year was it? Like 93 or 94 something.
Right. Yeah, that 92 is not a huge number.
No, I mean,
Uh,
we could blow
yeah.
past that pretty easy on the corn side.
Right, right. So there again, and again, that's just how their models churn out the numbers. But given that kind of production, without some significant increases in those use categories,
Hmm.
and if we don't, again, if we don't budge that, those use numbers, that pile of grain is could get relatively large at the end of these marketing years, and that gets tough. We get another run like we had in 14, 15, 16, 17.
Yeah.
We're carrying over 2 billion bushels.
Yeah.
We're in that scenario now, given our demand outlook and our productive capacity.
Hmm. Yeah. We've seen
We're,
this
we're,
movie
we're
before. Yeah. We've seen this movie before. It could rhyme pretty close with, like you said, 13, 14, 15, 16, 17, 18. You know, it went a while.
that was a pretty rough stretch. Yeah,
Yeah.
yeah.
Yeah, for
And
sure.
again, throw 450 against that kind of outlook, and I think it's something that ought to at least get our attention. We decide to take it or not, that's fine, but at least be aware of some opportunities
Right. For
and
sure.
some threats.
Right.
Yeah,
And like you said, I think the one of the takeaways for me from your comments is getting those targets in there, put targets in, and segment them in, maybe start a little quicker than maybe you would like to with a smaller percentage to wake you up and keep you paying attention, and then work your targets up to that lofty number even too. And like you said,
sure.
maybe it hits it for 5 seconds. It isn't, if it does, it isn't going to be long. So for
Right,
sure.
right.
So I think great perspective as usual, Mark. Really appreciate your time today, and we'll let you run, and we will definitely get you back when we're wrapping this year up before the end of the year. We'll get you back and
All right.
what kind of other wisdom you can throw at us.
Yeah, there you go. And we'll chew on this a little bit more. Then always enjoy the conversation, Chris. Appreciate it.
Yeah, thanks a lot, Mark. And again, everybody, thanks a lot. Again, if you're not signed up for our AgView Executive Business Conference, also check that out on the AgView Solutions website. We still have a few slots left for that. With that said, we really appreciate it, and we'll catch you again next time on the AgView Pitch.